Hello and welcome to the final edition of our Scorable Credit Insights for this year. And what a year it's been. Markets have seen their fair share of ups and downs, geopolitical tensions have kept everyone on edge, and the economic environment has been challenging to say the least. So understanding credit risk is more important than ever. Let's dive into the highlights from our Q4 analysis and see what the data is telling us as we wrap up this year. When we look at our Scorable predictions for rising stars and falling angels, we can see that rising stars are still expected to outnumber falling angels, which is good news. Across the globe, our Scorable model has identified 38 potential rising stars for this quarter, which is a slight decrease of 1 from the third quarter. The risk of falling angels remains consistent with the previous quarter and stands at currently 30. Just as a reminder of how we define potential falling angels and rising stars, potential falling angels are BBB- rated issuers, where our Scorable model predicts a high probability of a rating downgrade within the next 12 months. Rising stars, on the other hand, are BB+ rated issuers, where our model predicts a high upgrade probability. But it's not the same story everywhere. When we look at credit risk across regions, we can see that in the US and Europe, rising stars are predicted to outpace falling angels, which is great news for investors. In Asia Pacific, we've seen signs of improvement. This quarter, there's an even split between rising stars and falling angels, which is a shift from the previous quarter when falling angels were expected to dominate. Latin America, however, remains under pressure. Here, our model predicts more falling angels than rising stars, which highlights the region's ongoing credit challenges. Now let's take a look at credit risk across industries. As we can see in the chart, household goods and consumer goods are under the most pressure, with aggregate downward probabilities of 18% and 15% respectively. Changing consumer habits, inflation, and economic uncertainty are all taking their toll, affecting these industries in particular. A sector where we've seen a slight improvement from last quarter is real estate. Real estate has moved from the high risk to the medium risk bucket. So as interest rates are coming down, this is certainly bringing some relief for the property markets. It's a different story for the automotive sector, though. Automotive has moved from low to medium risk as the industry is dealing with supply chain issues, high material costs, and slow transition to electric vehicles, which is all creating headwinds for traditional automakers. So what's the takeaway? Credit risk will certainly remain a challenge for the next 12 months, but there's also ample opportunity in the market. Investors can still find highly attractive yields and growth potential if they're smart about their selection. And here, spotting rising stars early can make all the difference. And that's where BondIT comes in. Our Scorable platform is powered by machine learning and explainable AI to help investors anticipate rating changes, monitor bond ratings and spreads, and spot opportunities ahead of the market. If you want to learn more about Scorable or our technology, or you're interested in a demo or trial, please reach out to the BondIT team and we'll be happy to help. Thank you for watching us today and happy investing.